traders, welcome to the TMT stock market strategy video for Monday, April 25th. Well, the market's pushed lower and then in the middle of the day reverted right back up. Looks like they want to try to get everybody long in the markets at these levels, these lofty levels. I'm going to show you a couple indicators why I say to be very, very careful out there, because when we usually get to these levels, these extremes, we usually get some sort of a pullback. Also, we've been pretty much straight up 8 or going on 9 weeks now. With really no sideways consolidation and or a pullback. So that is also deemed to be a possibility of our next bigger move, which is lower and not higher. We could grind higher and test the highs, get everybody long again. That's what big money wants everybody to think and do. Earnings have been dismal. We talked about that. I do believe that markets will put in an interim top during earnings season, this earnings season. So we have another 3 weeks left. And we'll see what happens. And this is what I'm looking at. Nothing has been good in earnings at all. There has nothing been good out there. Google, you name it, guys, all of the big players. Now, we got Amazon this week coming up. We also have FOMC meeting coming up about interest. I don't think they're going to move, but nonetheless. And first quarter GDP, which they're going to be market movers for the dollar and for U.S. equities, because whatever the dollar does, equities will react to it. So that's something of interest. Japan has started to talk about negative interest rates again, and that soared the dollar. Yen actually took it on the chin on Thursday night into Friday, and that also put pressure on the soft commodities and regular commodities as well as precious metals. So interesting times that we're living in. And believe me, guys, we are going to see some fireworks, and it's going to happen. It's only a matter of when. Let's get right into the charts. Just want to show you what we got here. Stocks above the 50-day moving average. We were at 95%, pretty much all in. Yeah, we did dip lower on Friday, but look at this, still 88, well way above these areas here where we get to these points. We usually get a market sell-off in equity. So just keep that in mind moving into this week. Okay, next week, bullish percent SPX, 78%, guys. 78% here. That's no joke. Something that you need to take note of when you see this. This is interesting. Every time we get a crossover at these levels, you could see we usually get a sell-off. And this is the S&P down below. And sure enough, you could see how far we ran in about 8-9 weeks' time. We're starting to curl back down again from the 8. So I'm looking for a sell signal in and stocks above the 50, bullish percent SPX. And take a look at our McClellan oscillator here. Right now sitting at neutral. So the markets are showing a neutral state right now in the McClellan oscillator, which tells us there's plenty of room to run in both directions. So just also keep that in mind that we have plenty of room to go higher if we wanted to challenge the highs or to start moving down and making lower lows and lower highs. So something to think about when you're trading these markets. And you can see the markets are very, very jittery during the day. We really didn't do too much, but I want to show that in a second. Let's take a look at the UUP, which is dollar ETF. I pointed out on Thursday we had a beautiful bullish fallen wedge pattern. Well, we are officially out of that wedge. Usually we get a market that pops up and then back test creates that higher low from this low. And then sure enough, we start to really move higher. So wouldn't surprise me if we pull back a day or two on Monday, Tuesday, and then start to move higher again. Okay, so that's something that you got to watch because it's definitely affecting our markets, equities, commodities alike. So definitely watch what the dollar's doing, but definitely have a bullish pattern here. Okay, the VIX also into this is the VXX, but the VIX right around about a 1280 handle, sitting at the lows. Not good when you have too much complacency here. So I'm looking for a VIX to pop up out of this downtrend channel. And start making higher highs and higher lows here. So keep an eye on the VIX this week. It's going to be a market mover. And as you know, guys, and for those of you who don't, this is inversely correlated to what equities does. So we have a higher VIX, we'll have a lower market and vice versa. Okay? Take a look at our spiders. And, I mean, you know, guys, honestly, for those of you who follow me, I honestly could care less the market goes up and or down. But just conversation. The market's up at these lofty levels again in an 8-week time frame with absolutely no change other than an expensive market that we're in and no earnings beat at all. And whoever beat earnings, we're cost cutting. and cut executive pay. That's not growth, guys. I mean, that's something that you have to be cautious here. I mean, this is just lunacy that the markets just continue to defy gravity and continue to go up, and that's what they want. But that's what happens when you see something like that. You're going to get another big move lower like here, and then don't forget like what we had here happen in August. Just a little market meltdown for months and months of movement. That's going to happen eventually. It'll happen again. Could it happen tomorrow? Absolutely, but who knows? Nobody knows here. But you without a pullback, I mean, it's crazy, guys. And this is what we're saying. We had just about half of March in a sideways consolidation. Then we had pretty much all of the first part of April, one push up, and then we're sideways yet again. So this is not a great way to see a bullish market at all in any way, any stretch of means here. Okay, transportation, yeah, it's up above the average, looking pretty good, looking better than what it has done since 2014 and 2015. But still, guys, you got to use caution. At any given moment here, we can actually roll right over. Now, even if you're day trading, you still need to know what the bigger picture is here. IWM, the Russell, this is what held the markets up on Friday. The Russell 2000, as you can see, we went sideways pretty much March and part of April, and now we're kind of taking out this downtrend line. So it's going to need to continue to chop around here and start to move higher. Otherwise, if it starts to roll over, this is our secondary leader. It'll definitely drag down equities as well as the transports, as you know. Diamonds here doing well, took out the high. Now still within this downtrend, within this big bearish rise and wedge. But again, only bearish when it breaks. We'll see if it has any more legs here. And this is a legging index, so I don't put too much emphasis on the diamonds. Lastly is the Qs. Technology, guys, is just horrible. I mean, look at what they're reporting. They're not making any money. And you got Apple this week coming out. Their supplies already getting beat up, taking it on the chin. So you got to use caution no matter what. Should you be buying long up here and adding to your positions to go to new highs? Absolutely not. I'd rather let it go without me, and I would rather buy much, much lower if I was a long-term investor. Guys, you just can't be looking to buy up here into supply. You got to be very, very careful here, okay? Let's see what happens this week. It's going to be a very interesting week. Again, FOMC, we got some key earnings coming out, such as Apple, and, of course, first quarter GDP, which is going to be a market mover. And always, as you know, we have the crude oil inventories Wednesday morning at 10:30. Hope it helps, guys. Use your stops in this crazy market. We are going to vacate the area very, very soon, so let's see what happens. Have a great night, and we'll speak to you tomorrow. Take care.